Hi there. Have you wanted to invest in real estate but haven't really been sure of what the next step is or how to do that? Maybe you own rental houses now, but you just realize how much work it is and you just wondering if there's a better way. Well, in this video, we're going to talk about the amazing benefits of investing in multifamily syndication deals, and I'm going to give you 6 specific big reasons why you should look at it now. So when we look at multifamily syndication, like I mentioned, a lot of us started with single family. We started with single family houses. We got up to several single family houses and just realized it was so much work. I even had property managers, but I was still getting calls. I was trying to grow my portfolio and I realized it just didn't quite pencil out the way that I thought it was going to. I thought I was going to get all these great returns and it just didn't happen. And so multifamily is very different than that. It's a much different experience, particularly as a passive investor, because what happens is you do your diligence, you invest in a deal, and you have these just benefits that come to you. So one of the benefits, the first one we're going to talk about, is that the returns are better. There are better returns typically than you find in single family. A lot of times we look at the returns as being similar or being higher with single family, really honestly, because we undervalue our time. If you looked at how much time you're actually spending to go in, renovate a property, rent it out, to work with the tenants, even if you're a property manager, a lot of times the returns are actually not what we think they are. So multifamily syndication offers better returns. It has consistent, historic double-digit returns. There have been multiple studies that have been done about this asset class, and we're seeing it consistently around the country, that you just see these much higher returns both in the stock market and also in single family as a whole. And so the first thing is better returns. The second thing is have lower risk and lower volatility. When you look at the stock market, you've got things that go way up, you have things that go down. A lot of people are saying, oh, I'm making 15% per year in the stock market. Well, what happens when the stock market goes down is that you lose a lot of those returns. So historically, the stock market, the average returns around 6-7%. It's not actually as high as you think, because you're not, a lot of times we're not counting those down years. So when it comes to multifamily, and especially large multifamily, we see that rents typically don't go down. Sometimes they'll go down for a short time and then they'll come back up. There was a time, I live in Southern California. If you live in a major market, you might be able to remember this. There was a time in 2008, early 2009, where rents did come down a little bit, but then they came back very strong. So when you look at that kind of on a curve, it actually just kind of dipped a little bit and then came back kind of right on that same upward trend. So generally, they keep pace with inflation, especially with all the money printing that's happening. You have just a very stable asset that the government has even shown that they're going to help support people to stay in their homes and pay their rents. So you have lower risk, you have lower volatility. I can get into stats on that. There's all kinds of information about how multifamily, large multifamily is a very safe investment. The third thing is really you have lower fees. Typically, when you look at stock investing or you have a money manager or things like that, you'll have all these fees, and they're kind of, some of the fees are hidden fees, and that's why I don't like Wall Street, is they can legally hide fees in there. And if you have a money guy or a money person, they'll take sometimes 2% just off the top of everything. Typically lower fees. So the returns that are presented with a multifamily deal, so let's say a deal says, hey, this deal is going to return 15% per year on average. That's what we're projecting. That's net of any fees. So the fees typically are built into the deal, and typically it's a performance-based fee, most of it. So you may have a small acquisition fee on the front end, you'll have an asset management fee, kind of a small fee, but the bulk of what a multifamily syndicator will get paid is really through the performance, so that they'll get 20% of the profits and the passive investors will get 80%. So again, you have a linked interest, which you usually don't see in Wall Street, besides really hedge funds and other things, which are really, I guess that's another video about hedge funds. But so I mentioned this before. Another benefit, the fourth one, is really the inflation hedge, that as the money gets printed or as rents generally rise, which happens over time, even the Fed's target rate now is, at the time of this video, is 2 to 2.5%. So again, they're just going to keep trying to produce inflation, and then if inflation ever gets out of control, having income assets such as multifamily real estate is highly beneficial in that situation. So fifth thing is the tax advantages. There's some real amazing, almost unfair tax advantages where you get to write off a significant portion of what you make through a deal like this. And then you also get to defer some of the other taxes as well. So it really is, we'd have to kind of get in the weeds to kind of explain that a bit, but there are some highly advantageous things to investing in multifamily syndication in ways that even other real estate you're not able to fully take advantage of. So there's some amazing tax advantages. The last thing, I guess, would be number 6 big reason why you should invest. And this one I think is huge. This is really my passion, is it really is truly passive income. To be able to be somebody who's a high paid professional, or maybe you own a business or you're retired, you don't have to give much more of your time to actually grow your wealth. So again, we're used to making money. You go to work, you do your job, you have your business, you're in your business, you make money. But over here is passive income, where you start putting money in there and it just keeps growing. It becomes this snowball that just kind of gets bigger and bigger and bigger over time. So the idea is it really is scalable. It's very different than single family. Single family rentals is just, it gets to, the more you have, the more work it is. It's different than active stock trading. It's different than any other investment, because you're actually investing, for the long term. And once you invest, you make the decision to invest, you become truly passive. So I think it's something that every single person who does well at their job, who's making money, who's trying to figure out where to put their resources, should always look at multifamily syndication. This is really what wealthy people really get, that the middle class or even upper middle class really don't understand, is that real estate has some real distinct unfair advantages, just like these 6 ones that I shared. So I'm convinced that in any economic environment, during a recession, during a pandemic, after a pandemic, this is a great place to invest. And so I actually put together a report about investing during and after a pandemic. And it's a great report. It's a free report I want you to download. Go to bronsonequity.com/report. You can download it for free. And if you're interested in doing deals, we do deals frequently. We're looking for like-minded investors to invest with us. You go to bronsonequity.com. You can join our investor club. We'll get to know each other a bit and see if it's a good fit to work together. So thanks again for taking the time to educate yourself, and we'll look forward to seeing you on the next video.
Well, hey there, before you go, make sure you like this video and subscribe to this channel so you can get new content as soon as it's available. Also, check out this free report I wrote about investing during and after a pandemic, comparing the stock market to real estate and other investments. You can check out the next video here.